I Love Mortgage Brokering, episode 59.
The most inspiring stories from today's most successful mortgage brokers. Join your host, Scott Peckford, on I Love Mortgage Brokering.
Hi, Broker Nation. I am thrilled to introduce our guest today, Boris Bozic. He's the CEO of Merrick's Financial. He's been in the mortgage business for over 26 years. He founded Merrick's on the back of a napkin 10 years ago, and it's now a company over $20 billion in assets. And I'm absolutely stoked for this interview today. Boris, are you ready to rock?
I'm ready to roll there, Scott. How you doing today?
Awesome. So can you just tell us a little bit about yourself and how you got into the mortgage business? Because nobody usually starts out as a little kid saying, hey, I want to be in the mortgage biz.
Yeah, I do. It's like most people in this industry, I bumped into it, and, it's an interesting story. Well, at least it is to me. I always, envisioned myself after school that I was going to become a real estate tycoon. And I figured anybody could sell me real estate. Even when I didn't know about real estate agents back then, I figured anybody could sell me real estate. What I didn't know is what I thought was very, very important. Why would somebody give me money? And how do you get money? Mm-hmm. And so I just went through the process myself of getting a mortgage through a mortgage broker. And I still at that point couldn't understand why he gave me the money that they did and how we got it approved. So I thought this was going to be a 6 to maybe 12-month gig to get myself an education, and off I would go to other adventures and, accumulate all kinds of real estate. And, well, here I am 26 years later, still in the mortgage business. So I started off as a mortgage broker. So I knew what it meant to hustle for a living. Okay, now, albeit I was a mortgage broker when we were chiseling applications on a cave wall.
Was there a fax machine? When you started, was there a fax machine?
Actually, Scott, this is the honest truth. I remember the broker bringing in a fax machine to our office, and he said, you got to see this. And so we plugged it in, and we watched it work. And I remember the broker owner looked at us and said, you know what, this is never going to work.
That's awesome.
Brokering back then was a little bit different. But you know what? In some ways, it was a little bit more efficient, too, because I would never see a customer unless they came in with a complete package for me, right? Because you had to meet every customer face-to-face. So they would come in and they would give me a complete package, and then I would work on all of my deals for a couple of days, and then you would sort them, and then you would create a milk run by going to actually drop the deals off to the lender, and so you could convince them to issue you a commitment, and I'd say 90% of the time beg them to do the deal. And it was old school lending. It required mortgage knowledge, a fair bit of sales acumen, and boy, a lot of charm to be able to get a lot of those deals done. So,
and then so you started you got this mortgage the first time done through a mortgage broker, but then how did you become a mortgage broker? It's like, what prompted you to go from, hey, I got a mortgage to I want to actually do this for work?
Well, it was interesting. As I said, I was looking for an education, and I remember talking to my real estate agent. I said, you sent me to this mortgage broker, and I did a really good job, and I want to get into this field. Do you think you would hire me? And she goes, well, best way to find out is to pick up the phone and call him. Mm-hmm. And so that's what I did, and I told him that I wanted to get into that space. And I remember him recommending, because he asked me where I lived, and he recommended another broker that was closer to my home. And I remember, and maybe it was because I was ego-driven at that time, I said, the guy's trying to blow me off here, which of course made me want to work for him all the more. Right. So I went to go see him. I did the pitch. I told him I'd do whatever was required, to be successful at this, a good learner, everything that you say when you're one of those eager new, green, wet behind the ear, new entrant into a marketplace. I did that, and I did a lot of the donkey work at first, and, from paperwork and, putting together packages for them, and it was fairly rudimentary, and, but I took to it. I really did. I loved it, which was really kind of ironic considering math was never one of my stronger suits in school, but, thanks, to those little brown books that we had at that time, we could do all of our mortgage calculations, but it was all done by hand, and, that's how I started that business, and then I came to a point where, I needed something else to sort of turn my crank, and at that point in my life, I wanted a different challenge, so I ended up moving out to Vancouver. Didn't know anybody. I just went through some personal issues, and I thought, it was time to start a new chapter, so off I go to Vancouver all by myself, and I got a job with Mortgage Center Canada, is the area franchise manager for Western Canada, and it was a wonderful experience because up until that point, I had never been west of Manitoba, and so I lived in Vancouver and worked in that space and ended up managing a brokerage firm eventually in Vancouver. That it offered me a really unique experience that not only was I a mortgage broker like all of our customers are, and we refer to brokers as our customer, but I had a chance to work on, both sides of the country, East and West, and being able to appreciate the subtleties, the differences, and the nuances. So these were all layers that, helped me develop over time, and I think that assisted me that we finally went live with Merrick's that had helped me able to work with some outstanding people internally and our customers externally to grow the company to a certain level of success.
Right. So just out of curiosity, so what do you perceive the difference between like your BC customer being brokers versus your Toronto customers or your people from out east?
I got to be careful.
I'm going to put you on the spot here. So
yeah, I'm going to parch my words very carefully here. I would say the broker in Western Canada, and specifically in BC, views more. I think they view their business more on the consumer advocacy side than the broker in the East who views his business or her business from an entrepreneurial side. Right? So when you're trying to push a button of a customer, there's a different approach that you take, right? So the rate sensitivity, the ease of the documentation and all the post-servicing that a customer gets, that's what you spend time talking to a broker in Western Canada, and specifically in BC. Where in the East, your initial salvo, if you will, in discussion is around money. Right? So here's how much you can earn. Here's how much we pay. Here's some of the variances and the difference that's available in the marketplace. And here's the interest rate for your customer. Right? So to me, those are the two primary differences. One's not right and one's not wrong. It just, there is a difference.
Right.
And then you have the broker, I would suggest there is another region, is in Alberta. And I can't believe I'm volunteering this.
I know. Keep going. This is going to be awesome. Keep going. This controversy is good.
No. But I will say this about Alberta. The Alberta broker, when it comes to understanding nuance of policy, they're the absolute best in the country, based on my experience. I mean, they know in terms of CMHC, Genworth, Canada Guarantee, that where their policies are, where the commas are in that policy, they can recite it chapter and verse. And so the discussion that you have with them in a lot of ways is the real nuance of the policy, and in terms of, well, you can make an exception based on this policy. Now, I know I'm making some broad generalizations here, right, in terms of my statements, but those are that's how we categorize the brokers differently from across the country. And then when we're putting strategy together, and in terms of what our communication is going to look like and sound like, then we can direct it in a specific manner to a specific region of the country.
Right. And actually, a friend of mine who would fit that bill, his name is Tyler Volk. Have you ever heard of that guy?
Oh, yeah, I know Tyler.
Yeah, I call him the mortgage ninja, because honestly, any mortgage question that I'm like stumped on, I'm like, hey, Tyler, what do you think? And he's like, oh, yeah, he's like Rain Man or something. He just can remember.
Actually, yeah.
He's one of those guys.
There you go.
And he's in Alberta. Okay, so before we dive into more about the story of how you became the CEO of Merrick's and founded on the back of a napkin, I'd like to ask about a success quote that's really impacted your life or business. Because I find quotes are portable, they're memorable, and they're just something that can help you keep on track. So can you share a quote that's really had an impact on you?
Oh, sharing a quote, I don't know. As I get older, I get bits and pieces. I'll tell you a quote that I found rather profound recently, and I'll share it with you. And it was a sales training session that we took all of our staff to, and it talked about customer interaction and service levels, and here's what he said. And he gave us a scenario, and he said, this problem, it's not our fault, but it's our problem. And that's how they handle everything. And it was almost like this light went off for me. And I thought, that's it, because I think in this industry, we have a tendency spending way too much time trying to assign percentage of blame. Right? You're 65% at fault, I'm 35%, so therefore you got the bigger piece, therefore it's your problem. It's not. And so we've tried to now instill into our people, it doesn't matter if it's not our fault, it's our problem.
That's really good.
The only thing that we have to do now is to find a way to fix it. We can look at the symptoms of the problem post to ensure, or at least to try to make sure that it doesn't happen again. But at that specific moment in time, this is our problem. We own it.
So can you share, that's an awesome quote. Can you share an example of something recently that you can think of where you applied that principle of, hey, it's not our problem, but it's not our fault, but we're going to take ownership of the problem?
We do that daily. Documents get missed, right? It's, okay, here's what you got to do. And they say, well, I can't get it done. Okay, we got to fix it. We're the ones who have to call the solicitor. We sometimes might have to call the customer directly. It's those things that you're prepared to do that go above and beyond. Mm-hmm. And at that point, you can't sit there and go, hey, this is what I'm paying you for. Yeah, right. That's true. We had an expectation. But here's the thing. So what? At that particular moment in time, and I will tell you, this usually happens within the last 10 days, just prior to closing, mm-hmm. right? And when we're flooded with docs and everything else, and that's where you have to sort of, write that down on a piece of paper, put it up on your bulletin board or put it in front of your computer screen and say, it's not our fault, but it's our problem. So mm-hmm. if you called me in the last 10 days, I could probably give you all kinds of examples, mm-hmm. Now, as far as another quote goes, or another saying, I remember a number of years ago, I had the opportunity to listen to Michael Eisner speak. For those who don't know, Michael Eisner used to be the CEO of Disney, ABC, mm-hmm. ESPN, and he said something that really struck with me because it was one of those disseminating moments, right, where you go, aha, I've never been able to crystallize it that way. They talked about Disney and their experience and how they get to perfection, because that's what their stated goal is. Mm-hmm. And he said, at Disney, we don't allow our employees to think outside the box. What we make our employees do is master what they do within their box, and when they master it, we put them in a bigger box.
Mm-hmm. That's good.
And I knew, for years that term has bugged me. We got to think outside the box. Whenever I hear it organizationally, that usually means for me, people are bored, mm-hmm. right? Or people are looking for a magic bullet or a magic solution, right, to fix a problem, where in a lot of ways you have to get back to fundamentals and through pure repetition and execution. And mastering that. And so, when I heard him say that, I thought it was going to be sort of one of my go-to things as I go forward when I hear somebody say, no, we got to think outside the box. And my first answer then, of course, is, have you mastered everything in your box right now? Mm-hmm. Because if you haven't, let's stop thinking outside the box.
Right. That's really good. That's really good. So I'm going to switch gears from the quote to failure. I know that for me as a mortgage broker and entrepreneur, that there's been times there's been failure, but there's always looking back, there's a lesson in it. So can you share something that you had failed at, and then looking back, the lesson you learned?
Oh my God, I fail every single day.
Then pick a big one then.
It's interesting. That's when you without any kind of risk and failure, there can be no growth. And one of the things that I failed at when we originally, we did some research, but we didn't do enough in-depth research. Is that when for example, when we started Merrick's, I really believed, and based on what we were told, that this model was going to be very attractive for that senior mortgage broker between 10 to 15 years, mm-hmm. right? That they're going to accumulate some wealth, and they were starting to think about the future. And then when we launched, we went to go see all these brokers that we maybe spoke to beforehand, and they said to us, Boris, it's a real shame that you weren't here 5 years ago, because I'm going to be getting out of the business 2 years from now. Mm-hmm. And unfortunately, they've been telling me now this for the last 10 years, right? Because they don't know how to get out.
Right.
And so the failing when we first started is not really identifying, where that sweet spot was. And it was a lesson that I learned in terms of doing the proper research. See, we talk to these experienced mortgage brokers. And you know what? Quite frankly, with or without trailers, they can survive because they do quite nicely. We had to change track and gear very, very quickly after we first launched and say, okay, we got to stop talking to these guys because for whatever reason, it's not resonating with them. And we have to change our strategy completely and look for that broker somewhere between 15 to 20 million in an age demographic between 25 and 45. Mm-hmm. That had a good, a number of years ahead of them in the industry, but they weren't doing an extraordinary amount of volume where they will think they will always survive, mm-hmm. right? They look at their income and go, yeah, this is kind of nice, but I want to start thinking about tomorrow, and I'm not like broker B down the street where I do 100 million mm-hmm. a year. And so to me, a failing when we first started our research in terms of, what our plan is and who's going to actually be attractive to, it wasn't in depth enough. Now, we were very fortunate that we could shift gears. We were small enough and we were nimble enough that we were smart enough not to dig our heels in, mm-hmm. right, and allow ego to take over and say, okay, here's where we need to go right now. And we did that. And we were very fortunate that we still hold a record for the most amount of origination in the first year of operation of any new entrant into the mortgage industry, prior or since. And we were also very fortunate that the market was very buoyant at that time, back in 2005. But so what? We took advantage of that. So this to me was a failing on our part, that the research that we did wasn't extensive enough and that we didn't really capture who our ideal customer would be. And I've never made that mistake again.
Right. So you basically, your target customer in your mind anyway, who you thought was the target, was not working out. And then you just pivoted and said, okay, then who is going to be our target customer? And how quickly into the process? So you launched your company and you got this great, how quickly did you guys pick up on the fact that these sort of brokers that are nearing the retirement were not interested in making a change to how they did their business?
This was pretty clear within 60 days. And what I found very fascinating, these were the same individuals that, we did speak to prior to launch, and they said, yeah, no problem, I'll send it to you. And then it's go live time, and then it was almost, you know what, and, I'm going to be getting out of the business, but why don't you come back and talk to us in 6 months from now or 12 months from now? It was almost like, nah, you know what, you're going to need to go cut your teeth somewhere else.
Right. Well, it's good that you guys recognized it, for sure.
Yeah. So we, as I said, we certainly didn't dig our heels in from an ego standpoint and say, no, we're going to demonstrate to everybody that this was the right way. As I said, it was after about 60 days, we just went, right? But once again, we were smart enough and we were ego-less enough that we that we did identify that and said, okay, let's go and get it somewhere else.
Okay, that's awesome. I'm going to ask now, we had talked briefly off air about sort of a little bit about where Merrick's came from 10 years ago, but I just want to take you back to, you were a broker, then you worked a little bit in banking, and then 10 years ago you had this idea. So share with me where the idea for Merrick's came from the back of the napkin to 20 billion in assets today.
Well, yeah, you know what? I worked at TD Bank. I was director for national sales for the broker channel and also for their builder business. And a valuable lesson that I learned, I'll never forget this. When I was at the bank, I remember at that time it was the Philogic report that came out, and TD had finished number 2, close on the heels of First Line. And when I first got there, we were comfortably in number 7. And I remember a senior executive of the bank sees me in the hallway and he calls me down. He says, hey, you need a word? And I said, sure. And he says, listen, I just saw the Philogic report, and I just wanted to say congratulations. And I said, thank you very much. Yeah, a lot of people are working hard. I'll never forget, he put his arm on my shoulder and he said, there's nothing wrong with being number 2. And it was just like, at that very moment, I said to myself, my career is over here, right? Because I get that I can't win all the time.
Right.
What I don't get is when somebody that has the resources that could assist me and we could get to number 1, that you look at me and say, it's okay being number 2.
Right.
So I knew that my time was going to be coming up, and I also knew that we kept bringing some ideas forward, and it was always, this is always, it's interesting, but you know what, just carry on the way that you're doing right now. And so Kathy Gregory and myself, spent many nights enjoying a vodka soda, and we started to flush this idea on the back of a napkin. And, after about getting, 130 individual napkin slips, and, somewhere here's a business plan, we thought,
and how many vodkas?
More than the napkin slips, right? And it's funny, the more vodka we had, the greater this plan sounded. If we think we're that smart, why don't we do something about it? And I think, we were both at the, at that time in your life and where you're at that age where you go, if I'm ever going to take a risk, now's the time to do it. And so from there, the first thing that we had to do was hire the CFO, because we needed somebody to make sense of our idea and, how can this thing actually make any money? And then you go out and raise the capital, and, much to my surprise, there was a group that said, yeah, we're really interested in this, and they become our primary investors. And 8 years later, there's a liquidity event, and they got a return on their investment, and I can't tell you how proud that makes me, because they took a lot of risk in us. They believed in the people, because all they had was a document and a piece of paper in front of them, and they're the ones who stroked the check. So to be able to garner a return for your investors is to me is a badge of honor. together. And we were all very, very proud of that. And now we have new investors. They're fantastic, a private equity firm out of New York, and they work with us. And, the company is now at a different stage than it first was as a startup. And, so the expertise and the capital requirement and the investment back into the company, it's at a different level today. And, the new owners bring, that level of expertise into the business as well. And, knock on wood, it's progressing nicely.
So just out of curiosity, that you have these conversations, and then you finally decide, okay, we're going to pull the trigger on this. When you gave your notice for your job, what was that like, as far as because you have this obviously a pretty good role with the bank and it's secure, and now you're going to jump into the unknown, and you're going to bring a business model that was in a lot. I don't even think it existed prior to you guys. I know that Macquarie was around, but I don't know who came first. But so what was that like?
Well, first off, yes, we were first. We were there before Macquarie was, and but I got to tell you, that walk down the hallway to go and see the SVP that I reported into, it was a long walk, right? Because
it's like the Green Mile.
Yeah, because this was a safe gig for me, right? And I could have probably stayed there for quite some time. I had enough experience in the broker space, and the bank still does have resources in that, and it's a very recognizable brand. I mean, Christ, I don't have to sell it, right? So from that perspective, it was a hell of a risk. I'll tell you how risky it was. How old was I? I was 42, 43 when I pulled the trigger. It was 2 years later that I told my mom that I quit the bank.
That's hilarious. You didn't tell her for 2 years?
I didn't tell her for 2 years because she would have freaked, right? My mom is old school. She's old European. You have an important job at the bank. You would have to be insane to give that up.
Right? That's awesome.
So, yeah, it took me 2 years to muster up a courage to tell my mom that I'm no longer with the bank.
That's awesome. Okay, so that was kind of the past of where you guys came from. Now I want to switch to the present. So there's lots of obviously lending options available in the marketplace. So what, in your words, what makes Merrick's unique?
Listen, I think our uniqueness is the fact that we do things a little bit differently than everybody else. We're constantly challenging ourselves to say, how can you be a little bit different than the other guy? And if the other guys and most of the industry is going down this road, how do we veer off slightly to make ourselves noticeable? And the first thing, obviously, was trailer fees. And when we came out with that, because nobody had it. Everybody knew about it, but there wasn't anybody that went out there and sort of legitimized it as a compensation model. And one of the things that we're proud of today is that many brokers today are receiving reoccurring revenue in some form from other financial institutions. And I can assure you this didn't happen because said financial institutions woke up one morning and said, hey, how do we pay brokers more? Right? They recognized this was a trend and that this was a want of mortgage brokers. And there was a brand in the marketplace that a broker could hold up and say, hey, these guys are doing it. They seem to be garnering some success. So unless you provide it for me, I may have to talk to them. And so for us to have that kind of influence and being this small player gives us a degree of satisfaction. Another thing, for example, when we first came out, we had the term selective access. We knew sort of where the industry was heading, and we believed that it was heading. We knew that we couldn't deal with every mortgage broker in the country, right? So we would have to go out and target individuals. And remember, we were doing this before we even did one single deal. The temerity, but it was a part of our principle and our philosophy. And yet I take a look at the pooling that is done today, where most FIs are designating or identifying certain brokers as saying, this is the go-to, this is the broker of record or agent of record that I want to deal with. So, the industry, has adopted more and more of that as well. We were the first FI really to embrace social media. I remember the first time that I heard this thing called Twitter, and, I called a couple of 20-somethings into my office and I said, you need to explain this to me because I don't get it. And, they looked at me and said, listen, you dinosaur, right? And they're talking to me. And even after it was finished, I came to the conclusion, I still don't get it, but here's the thing. It doesn't matter if I don't get it. Our customers appear to be getting it. And I said, the world is going to change, and we need to change because we can't force feed our customer one communication vehicle.
Right.
We're going to have to offer them multiple ways to communicate to them and let them pick and choose how they want us to communicate to them. In the most recent iteration and evolution is the launch of LendWise and the success that we're garnering with LendWise. Now, LendWise, quite simply, is a compensation model, and it mirrors a little bit more, the traditional compensation models in the industry. Now, what makes us different is that a broker that we're dealing with can now pick compensation models based on the deals that they have on their desk. In other words, if I got a $100,000 mortgage on my desk right now, maybe I want the upfront comp on this particular deal because it's a smaller one, but I've got this other $500,000 mortgage. I'd like to get trailers on that for a long time. So instead of trying to force feed just one compensation model down a broker's throat, we're saying, listen, you know your business better than we do. You know your needs and wants better than we do. We just want to be able to have an umbrella or a tool chest of things that are available that can satisfy your needs and wants, and you pick and choose which one you want.
Right. No, that's good. And that's been an iteration. How long ago did you guys start that?
Lendwise really sort of on steroids, if you will, and that was about 2 years ago. And we're seeing a tremendous amount of growth. And what we're seeing, too, is that a lot of the Merrick supporters that we have, well, they were still doing business with other FIs. They just weren't doing it all with us because, for whatever reason, they were gravitating because they wanted the upfront comp. Now, a lot of our supporters, we're giving them that option. You don't need to go somewhere else because it's the same underwriter, right? It's the same business development person. It applies to your status program that we have. So there's all the treats and all the goodies and all the benefits that you have. And when I explain it to people in the marketplace, here's how I explain it. Avis and Budget are owned by the same company. Yet they're two distinct brands, right? And what we wanted to do is to make sure that we had two very distinct brands in the marketplace. That when you looked at the Merrick's X, it represented future revenue, right, and book value. When you looked at the Lendwise brand, it was about the today and now.
Right, that's good. Yeah, because I see more and more big companies tend to have different brands. Although just recently, Future Shop and Best Buy and Future Shop shut down, but they were owned by the same company, right? And you had two different business models that ran simultaneously. So yeah, that's
right.
Brilliant.
Like, for example, Rogers owns Fido, right? Touchstone Pictures is owned by Disney, right? Touchstone Pictures is where you'll have the profanity and some nudity, right? So they certainly don't want to attach that to the Disney brand,
right?
So you call it something else, but you're getting a bigger piece of the market,
right? Okay, I'm going to switch to just the future now. So where's the opportunity do you think, for lenders and for brokers in the next couple of years?
You know what? I think the brokers play a critical role into the future, and I think one of the advantages of all the complexity of mortgages today and all the changes to the regulations, I believe makes the broker even that much more valuable in the value chain. Someone's got to explain this stuff. And so I think from an opportunity, but I think from a broker standpoint, I think one of the things that has to change is you have to try to stop being all things to all people. And I would say this to a new person, specifically when I say new broker, I'm thinking maybe 5 years or less. My advice and counsel to them is pick one segment of the marketplace and become the preeminent expert at that segment. So if it's first-time homebuyers, that's where 80 to 85% of your time is spent. And think about technology, think about communication, think about everything about first-time homebuyers. Now, if you get a private deal, you get a commercial deal, of course, you're an entrepreneur. You want to get it because you want to earn some money on this. And you need the revenue. Pass the deal on to somebody with the expertise. Don't let it bog you down.
Right.
And I think this is happening today is that I think some brokers are taking on this diversity of different types of deals, and then with the complexity, you can't be an expert in all things. And because you haven't focused on one segment of the marketplace, you can't really point to one thing and say, man, this is my domain. This is my space. Nobody knows it better than I do. And so this, to me, I think a level of expertise relative to, a segmentation is going to be required. And I would also say the advent of technology and embracing it in every possible manner. You think about the banks and what they're trying to do. And as much as we like to pride ourselves that, the banks have really emulated brokers in terms of mortgage sales force and they copied us. And well, now it's time maybe for brokers to start emulating that, because what the banks are really after now is the customer experience. It's the total customer experience. And so the challenge now for brokers is how is that interaction and that experience between customer, borrower, and myself, how is that unique? What am I doing to make that unique? How is it different than everybody else? And so to me, this is the challenge for brokers going forward, is how do you make your customer experience different? Because you know what? The mortgage almost becomes the loss leader. Everybody today is in, how do you make me feel? right? So I think we need to focus more on the feel aspect and the emotional quotient of the sale and of the chain that's required versus just, I'm going to get you the absolute lowest rate.
Mm-hmm. That's a race to the bottom. So I have absolutely enjoyed this interview today, Boris. Where can people find you online?
You can find me online quite simply at merricksfinancial.com. And listen, if you haven't, I would encourage, I blog a little bit. I must confess, I just blog whatever I find interesting for that particular, on that particular day of the week. It's not necessarily about mortgages all the time, but it's to the point with Bozic. And you can find my blog. And if there's anybody that's listening and want to call or get a hold of me, it's Boris, Boris, Bozic, Bozic at merricksfinancial.com.
Awesome, Boris. And anybody listening, they can go to ilovemortgagebrokering.com, and all the links I'll put to Boris, to his website, to Merrick's. And Boris, I really appreciate your time today, man, and I hope Merrick's continues to crush it.
Thanks much, my friend, and it was my pleasure. Thanks.
The most inspiring stories from today's most successful mortgage brokers. Join your host, Scott Peckford, on I Love Mortgage Brokering.
Hey, Broker Nation, Scott Peckford here. Have you joined our VIP club for mortgage brokers yet? If not, you're missing out. We share exclusive content not available on the web or the show. We share scripts, step-by-step guides, and other insider tips to help you save time and make you more money. I can't tell you how many times after I turn off the recorder, a guest starts sharing some awesome advice or a script or a tip, and I take the best of this and share it with my VIPs. If you want to get on the list, visit ilovemortgagebrokering.com/VIP. That's ilovemortgagebrokering.com/VIP. Oh, and one other thing. Since this is exclusively for mortgage brokers, there is a skill testing question. Good luck, and I hope you continue to rock your mortgage biz.